Hello, my name is Cliff Stanwyck. I am an independent broker for Cliff Stanwyck Real Estate, and it's been a while, and it's time to do a real estate market update. It's been a while. I've been selling South Placer in California for since 2004, and I think we can all agree that this real estate market is changing. I mean, we all know that, man, all you have to do is look at the news, Sacramento, Sacramento's real estate market is cooling faster than nearly any other U.S. metro. Um, Basically, Redfin report on the news, Sacramento housing market cooling at second fastest rate in the nation. Um, it's definitely changed. I think everyone feels it's definitely changed, but again, when you go out and you look at the data, right, and you look at stuff, you know this market has mostly been driven by low inventory and low mortgage rates and people relocating, basically from the Bay Area because they get basically many orders of magnitude better house for half the money, and so they're moving here, right? And we've seen that, right? I mean, we've seen it with just the prices we see out there, right? When we go out to Zillow and we look at the housing home values, an average house in Roseville now is 700,000, and where was it in March of 2020? It was $500,000. So housing prices have gone up 40%, right? And and I use Zillow for a couple of reasons. One, most people are not going to my real estate website, which is cliffstanwyck.com, or to my MLS website, which is Stanwyck Real Estate or stanwyckre.com. They're going to Zillow, and they go out to Zillow and they're looking at this chart, especially one on the bottom, and man, there's a 741 number on this chart, right? And it's going crazy, right? Now they go out and they look at the number of homes, and this has definitely changed. There's 533 agent listings and there's 205 other listings, but you have to realize that rentals are also on Zillow. So, you got to be careful of how you look at what the inventory is. But in general, we've seen this market change, and this market has changed, primarily because of the interest rates. The interest rates are really what has changed this market, and the market is, it's changed, right? So what I'm going to try to do is I'm going to try to share with you what has really changed, and in order for me to do that, I really have to look at a very segment, a very small segment of the housing market in a high transactional area, which happens to be Roseville. All right. So what I did is I wanted to make sure that if I went from month to month to month, and so what I've done is I've looked at the houses that sold in May, the houses that sold in June, and the houses that just sold in July. And so what did I use for a criteria? The criteria that I used was I used 3-bedroom houses with two bathrooms, square footage from 12 to 1,500 square feet, only 2 garage spaces, and I did not throw in a pool. Okay, and that's what I did. And so what happened was, our rates started taking off in about May, and what happened in May was we had still a pretty that knew this was going to happen. Unfortunately, when I changed the stats, it kind of blew up. But what really happened is that in in May the rates went up, and I'm just logging back into my dashboard here. I was hoping to do 3 windows, but MetroList does not like it, so we're just going to have to go back, and I'm just going to have to reload it. And then once I get it loaded in, it's going to take me a little longer. I was hoping to just bounce from window to window, but it's just not going to happen. So let's go back to where we were. We were looking at May, and we were looking at the stats, and the stats we were looking at were basically the sales, right? And the sales were on the criteria here. And of course, I'm looking at this. I have to get the 11 houses back up. And here they are. I'm going to share my screen again. So here we are again. So there's 11 houses. And look at the time on market here. 9 days, 3 days, 2 days, 5 days, 7 days, 9 days, 6 days, 2 days, 8 days, 6 days, and 2 days. And I have this thing called stats, which now should be fine. And look at the stats here. The stats were, and we can look at the median, and I think the median's a little bit better way to look at it because it means half the houses sold for more and half the houses sold for less, where an average won't, will show you a different result. So half the houses sold for higher and lower. The listing price was $550, and they basically sold for $22,000 over the ask, right? So the market still really darn good, right? In spite of seeing, as you just went out and seeing this stuff. So the stuff moved really, really quick, right? So the other piece of this was basically is, what happened in June? Well, in June, right, the interest rates were still going up. We were pulling out of kind of COVID, the reopening, all that stuff that went on. And now, basically what happened now we're going to look at the next month here, which is June. This is what happened in June. We had 11 sales. We went down to 8 sales, right? So market activity went down a little bit, right? And the stats, we were at 550, right? The stats were, prices were still going up. The median list price was 562 and the close price was 574, right? So again, you have to kind of look at things. Hey, things were going along pretty good in spite of the rates going up. Yeah, we had a little bit of velocity came off, but again, things looked pretty good, right? And look, 5 days, 7 days, 13 days, 5 days, 12 days, 1 day, 10 days, 6 days. So, obviously the inventory, wasn't necessarily, was maybe increasing because the sales were going down, but we still had good velocity. Here's 2 offers. And this was 519 sold for 542, right? Then the next house was 7 days, and that house had 2 offers, so we're still seeing a multiple offers, right? And then here's a house that took 13 days. What happened on 13 days? We only got 1 offer. All right, so what does that tell you about multiple offers? You got 1 weekend to sell your house, right? And if you're low, you're probably not going to get multiple offers. Here's a house again that sold in 5 days, went out at 550, sold for 20 over, had 5 offers. All right, here's another house, was on 12 days. Want to guess how many offers? Let's see, 1 offer. So there you go, right? So now you're seeing what is kind of happening now with the market. What's happening now with the market is, multiple offers, right, are disappearing, and the only way you're getting multiple offers is that first weekend out. And after you go out the first weekend, you're not seeing a lot of pricing. Like that house that was on there for 13 days and only got 3,000 over, and that just might be, again, I won't get into it, but a lot of the reason for this pricing is buyers have almost become conditioned to pay over ask. Even though there's 1 offer, they're still paying over ask. And why is that? It's because your agent has told you that, hey, we want to win the house and we should offer more, so they'll take it because they're so expecting to get more than list that you need to offer more, right? So kind of crazy, right? Kind of crazy that we're still dealing with people paying more than ask. But as you can see, the volume went from 11 and went down to 8, but the prices were still good, right? The prices were still hanging in there, still closing around 570. So let's look at last month. Anybody want to guess what's going to happen last month, right? What happened in July? What happened in July is, which meant houses that were sold in June, was we only had 3 sales. And look at the time on market: 12 days, 55 days, 17 days. Now, let's also talk about what happened. When the market changed, a lot of people did not put their houses out on the market because in July they sensed that the interest rates were really high. And if you went out in July, you didn't see the velocity. Now, we got 12, 55, and 17 days on market. Does anyone out there think that these went for multiple offers? I'll answer the question for you. No, they did not. Right? And what are the stats now? What are the stats? The stats have really fallen off. Look at the median price now. It went out at 520. It closed at 518. So now you may not even sell your house for list now. So that's what's really happened now in this market. That is basically what's happened in this market. The velocity, or the number of buyers, has minimized. And why have they minimized? Well, interest rates, people's income. I mean, there are plenty of jobs out there. No one's saying that jobs are changing in the world, right? There's still plenty of jobs, right? So what we're really dealing with here is we're really dealing with interest rates going up, and that's impacting the buying power of people that are buying houses. And because of the buying power, they're losing 10% of it. So if for every 1 percentage point of interest rate increase, you lose 10% of your buyer power. So if you could buy a house for 600, now you're buying a house at 540. If you could buy a house for 700, now you're buying a house for 630. The rates have gone up basically 2 percentage points since the beginning of the year. So that's what we're really seeing here. We're seeing the impact of the market due to interest rates. And we're also seeing sellers now questioning whether it's a good time to list their house. But the reality of it is when you look at the market, there's plenty of houses for sale. And when you go look over at in Roseville, and we'll just go back and we look, right? You're seeing 533 houses, and here's a new house. We can just scroll down here. Let's look at one that's in the wheelhouse here. It's been on there 6 days on Zillow, right? And it's a 532,000. And Zillow still says the house is worth more than $532,000, right? And again, that this is just the nature of Zillow. And look, there's a lot of views in 6 days on a lower $500,000 house. There's over 3,373 views, and there's over 167 saves. And of course, Vernon Street's it's one of the, or Park Drive, which is close to Vernon Street, and it's in the older part of the town and downtown. It's a desirable area, and again, the marketing looks pretty good. The pictures look decent on this. It wouldn't surprise me if a house like this next week probably will be sold because it's nicely updated, and the market's changing, right? That's all I'm really trying to say here. And if you're thinking you're going to get multiple offers on your house, right? It goes the first weekend, and if it doesn't go the first weekend, you're going to be on market now for a long time. This causes a lot of problems for people that are using the equity in their house to buy another house, right? So the market is definitely different. I think that it's basically a velocity thing. We are seeing some price erosion, but most of those are due to the interest rates. Currently, the interest rates have come down now. They were back in this July timeframe or June timeframe. The rates were as high, we're in the 6%. Now they're back in the 5%, and on some of the bigger loans, we're seeing them back under 5%. So the market is going to stabilize. We're going to see fewer buyers, but the reality is good stuff sells the first weekend if it's properly online marketed. And you can go to my website and get my opinion of that. It will sell quickly. And if you get 2 people fighting over that house, you will get more money for it. If you have one offer they're going to negotiate. And that means you're probably coming off your list price, or you're giving concessions, or you're no longer going to get a free rent back. So if I can help you with this new market and give you, in my opinion, marketing that helps sell your house for more money, and also as a buyer to stop getting you to offer more than the list price just because the market's different now, right? I would love to help you. If you can go to my Facebook page, Cliff Stamwick Real Estate. You can go to my website, cliffstamwick.com. I really appreciate showing you this quick market update for August 22nd. California is not going to see a housing catastrophe. I just hate to share that with you. I'll discuss it in some other videos, but the bottom line is the investors aren't holding the bag like they did in 2008, and the prices and the equity in these houses are just not going to create the foreclosure snowstorm that we saw in 2008 to 2012. It's just not going to happen. So basically, you need somebody who's going to help you understand the value of this new market, and also just help you get the house that you want at a fair price. And if you're selling a house, you just need to put it on the market properly, and there's a few tricks that need to be done with that. But the market is just going to be slower, just like a lot of the economists are saying. We're not seeing a recession, and you can't have a recession with less than 4% unemployment. So again, the market's changed. Would love to help you, whether you're buying or selling. Reach out to me. Have a great day. And hopefully you'll find some success selling or buying in the new market. Thank you.